Hello guys, it's another market update from the trading plan. It is Monday the 21st of May 2018, and we'll start off by taking a look at the SPY daily chart. And so I haven't posted anything in a while just because market has really not done a whole lot. And we had some new, positive, signs coming in for the bulls. And so I think, we will have a little bit more constructive price action going forward. So essentially we've, since the all-time highs we've had in January, we've been, heading lower. And then lately we've made a new high compared to this last one here. So, and on top of that, we've also broken above this this downtrend line. So, market has been, sort of correcting. And then now that we've made new highs, it is looking more positive. So what I'm expecting, in the next few months is, market should sort of start head higher, more of in a grinding motion. And if we want to look at possible targets, we are looking at the 295 and the 307 levels. I don't think we'll go much higher to the 340, although that is also an important fib level. So this would be 13%. Half year is already gone, so 13% is not unreasonable. 25%, I don't know if we'll get there, but we'll watch. The market will do whatever it does. From a sentiment point of view, we had negative sentiment coming up this past few weeks. So one of the things that I track, which is a contrarian indicator, so it's Sentiment Trader. So this was posted on April 12th, but I think the reading is for the 3rd of April. So sentiment got pretty negative. So the green line here says that whenever sentiment gets lower than this level, it is time to buy or accumulate more stocks. And obviously if we get above the red line, it's excessive optimism. So the previous times we've had these levels, this would have been right after the correction in 2015, sometime in between 2012 and 2013. This would have been the 2011 market correction, 2010 correction, and this would have been during the financial crisis recession. So it's important to watch these indicators because they're contrarian indicators, and they give you a pretty good reading of what's going on in the market and how to position yourself. Another sentiment indicator I watch is the National Association of Active Investment Managers Exposure Index. So this one tracks what the investment or the active managers are, or how they feel about the market. So we had a reading of 49 on May 28th, and then 52 looks like, if you want to call it, a bullish divergence. The last time we had a reading of 58 was when right before Trump won the election. And if you remember, there was a lot of negative press around that time when he won, saying that the market was going to crash, but in fact quite the opposite happened. So it's kind of interesting to see how sentiment, when sentiment gets really negative, the market tends to bottom. And so right now we have a current reading of 85. A reading of 100 would be pretty bullish, meaning get more cautious. We had one of the highest readings since inception of this index, which was 120 back in December 2017. And after a month, we had a significant top, and the market has corrected since. So now we're getting to more reasonable levels. Obviously 50 is not the lowest level. I think this index can go as low as 0 would be the lowest. So because we're in a bull market, we're not going to get as low as that, but I think a reading of 50, 55, in combination with the market holding the 200-day moving average, and positive price action is giving me more confidence that the bulls are going to take this market higher. One thing that would get me super negative in the market is if we close below the 200-day moving average, which is this red line, and then if we stayed there for more than 3 days. So I don't see that happening anytime. Right now we have positive price action. So longer term, my longer term forecast I've been incorporating Sentient Trader or her cycle analysis. So Sentient Trader is I guess a website or software that tracks the work of J.M. Hurst, who, if you guys don't know who J.M. Hurst is, he theorized that there are different market cycles, and when we have multiple cycles that are peaking or that are bottoming, then we have to watch for turn in the market. So I'll let you guys research on Hurst, but so this was taken from their blog. And so on May 7th, we expected a low, and we actually got it on, I think, May 3rd. We have another possible low we have a nest of lows. So the wavelengths are varied. So somewhere in August, we'll probably have another sort of significant bottom. And then there is a peak expected in July. So with Sentient Trader or with Hurst cycle analysis, the troughs are more reliable. So yeah, we do have a possible peak coming up in beginning of July, but wouldn't pay too much attention because it could the wavelengths could vary quite a bit. What I'm more concerned about more than the long term is actually we have an 18-month cycle low that's coming up late fall of this year and possibly into early next year. So that's why I'm not super bullish on the market, just because I've tracked, I've looked at her cycle for a while, and it is quite accurate in being able to predict the bottoms more than the tops. And so I don't think we're going to be super bullish. I'm not saying we're going to crash here, but maybe we might have another test of the 200-day moving average, right? And then possibly go lower. And then even if we go further longer term, we actually have a much bigger, I think it's a 9-year and a 6-year trough. So that's too far out, so I'm not going to focus too much on it. So, for now, I think we're going to have, some higher prices coming up. So no reason to be bearish unless, of course, we break below the 200-day moving average. So I'm going to be doing more videos on specific sectors. So the small caps, has been making new highs. So this is going to be the new market leader, and it's good to see that the risk appetite segment of the market is doing well. So watch for stocks in this sector. Another sector or industry that has caught my eye is the software enterprise. So as the S&P has been sort of struggling to make new highs, we've made new highs. So we have a cup and handle formation here testing the breakout level. So we're most likely going to see higher prices in this sector. So if you look at the ETF PSJ, look at the top holdings, these stocks are probably going to be the market leaders for the next few months, probably, as the market probably heads higher. Crude oil has been doing well in the last few months, weeks. We are getting close to resistance coming in at 77, so I'm doubtful that we will be able to cross above. But once we cross above, or if we cross above that level, then we could easily get to 85, which is the next fib level. Now, the reason I'm watching crude oil strength is because I've been noticing that we've been having some strength in the US dollar index. So the US dollar index, came back to test this trend line here, and we've also testing the 50% retracement level. So my bias is that we will have a stronger US dollar, and my concern with the stronger US dollar is one of the commodities have to give way, because usually positive US dollar means one of the commodities takes a beating. So either gold, silver, sometimes copper, and obviously there's other correlations with the US bonds, but the gold and crude oil are the most important ones that I watch. And because I think we're gonna probably peak for the crude oil, and I'm thinking that the US dollar will get stronger. I'll also have a bullish outlook on gold. I'm still waiting for full confirmation. Once we close above this blue line, which is somewhere around 1400, stay there for at least 3 days. I am bullish on gold. So because I'm saying bullish gold and bullish US dollar, I'm just sort of staying on the sidelines, because I don't know which one. At some point, one of the asset class will have to give away, and for now I think it'll most likely be crude oil. So we'll have to watch and see, but it's possible, we could have strong dollar and then we could see gold and crude oil go much lower. So we'll have to watch, I guess, these 3 asset class to get a bit more clarity on the direction that these asset class are going to do. So with this, I'm going to conclude, and hopefully this is the last series of Is This Market Correction Done? I'm more positive in the market, so stay tuned for more videos. I'll try to make more stock specific videos going forward now that I think the markets are gonna slowly grind higher. Thank you guys for watching another market update from the trading plan. Stay tuned for more videos. Ciao.